Alright, good morning, good day, good afternoon. This is the African Crypto Warlord coming to you with an XRP update. So what we're going to look to see for today is higher time frame mean reversions. And what I mean by higher time frames is 21 days, 40 days, 45 days. We'll go see what's happening there. Furthermore, we'll go look at a volatility analysis. And from there, we're going to have the general assumption of what we think is going to be happening. And I think it'll be pretty clear. We'll be needing to look for serious cases in order to cancel this trend that's forming here on the higher term time frames. So what the general idea is all the way down there, maybe on the 15th of October, we had a 15-minute flash. Okay. And we've been stuck in the random distribution from that flash in these Laplace levels. Okay, so that's the 15-minute. All right, if we were to flash on for yesterday's analysis to line up today, I had a lot of, not anxiety, but I just had a lot of faith in my tools, alpha trading tools, to know that we come into these levels, we fail any one of these because we didn't touch the monthly mean. And this is generally my rule, is because we didn't touch the monthly mean, we're out by 0.25%, considering that's not even this wick over here, right? It's nearly double that. I knew that deep down we're coming back to test this monthly mean because it's our range. And our weekly range is up here, which will be verified by let me take that off, which can be verified. Here's our PB cone. So here's our mean on the 15-minute. And where's our weekly mean on our 15-minute? It's also up here. And because we haven't had a flash yet, it means that this trend isn't over. So in the same sense that the mean reversion play isn't over, but also the downtrend isn't over. But the fact that the mean reversion play hasn't flashed, you know that you're still in play for mean reversion. So you've hit outliers like our monthly mean, bounced off of our daily today, and then we're going to be looking for continuation until stated otherwise. And how do we state otherwise? When we have more flashes that all green ones line up, then we'll go look for the new trend. And then we'll see if that cone is, obviously if it flashes anywhere here, that cone will project out into one of these levels, so we know that any one of these levels is still in play. All right, so from here what we're going to go and do is we're going to go look at the 6 hour, those lines are all levels in which volatility is at 0, if you've been wondering. So what we have here is we have the general 6 hour cone. It has been pretty neat and on the money from down here all the way through. It's just good for ranges, big ranges. So we start to fail underneath said Laplace level. We will want to return here. Where's its mean? Let's go hunt for the mean. The mean is all the way up at with a positive skew, right? So we've got positive skew in this distribution even though we've dumped in first. Okay, which gives just general mathematical bots the willingness to buy up. Okay, so you have that at 72 cents. You could just say 71.56 is the general mean reversion. If you get here, you usually want to get up to here, which is a very fair observation at 77 odd cents. Okay, but that will be for later. That's once we'll start looking into those levels once we get up to here. If there's enough steam to see that we can clear this mean, get into this level and use this as like a breakdown to set in a bull dev, that's what you'll be looking for. But for now, you're looking to close above these levels, right? So you can see how VRE capped us here. You close above here, 46.78. You close above here, 46.79. And then you close above here. This is a 24-hour distribution cone. Where's that one falling in? 46. I'll be generous with it on the next print, 46.26. all right, so we can see that this is a major pivot in the market. What's going to confuse people? You can see right here that we have a JMA that's coming through. Okay, that goes red green, and we have this one that goes white to yellow. That tells me that this is just ready to trap liquidity. So I'm going to look on this time frame for a bull or a bear div. Okay, I actually have a mean reversion play coming through. What do you know? Okay, so it says that we've hit our outlier events over here. Let's see if we have a reverse. We hit our monthly mean, that if we were to flash up here, and then our reverse wave trend. We haven't hit our reverse wave trend mean yet, but also because we have these two crosses right here, this is a nice little pocket for liquidity. So there's a lot of panic buying, a lot of panic selling that can occur in this range, and it will usually want to stick around in this range. Okay, why do I say that? We have a blue flash off and it's through, and we haven't closed it. We aren't above any one of these things, right? We're only above our initial JMA, so it looks like it wants to close in between this region, and then the initial follow through from the slower 24-hour will also be at mean reversion phase. That will tick around. By then that guy's fully extended. By then that guy's also mean reverted through, which has 75% bulls come into the market tomorrow under a mean reversion play, and that happens if they keep this flash off. So we're in blue flash and now it's black, and that pretty much happens if you keep it above this JMA at 45.80 cents. So there you go. If you guys want to wreck the market, I've given you the numbers. Okay, so from here what we're going to go do is we're going to just go have a look at the 45-day, and then we're going to drop back down to 24-hour and then do the volatility analyses. So what we can see here, okay, first off, highly important observation. I have two flashes. This is my thin tail event, that's my fat tail event. So when these two flash, I know that the law of large numbers and small numbers are in effect. Okay, what does this mean? This means that we can draw out a thin tail event, which, if you're to say those micro movements, can extend into a longer term macro movements. Okay, I'm just going up here because this looks like it's mean reverting. That looks like the next 45-day print also wants to start pushing up to the upside. What keeps the bulls in the market? Right, 40 cents. Okay, as this lifts up, this JMA is going to lift up. So I'll say halfway between here. So we'll go 4,100 cents on the next open if this stays here. That's where it will be tested. Wherever this JMA is, it'll be a quick pocket wick, backfill for the sucker, and then see if that hits the first standard deviation to the downside. And if it does, and they hold it there, you'll have a bull div, and that will just have the continuation up to a red flash. Okay, so I know that's all this data works on any time frame, because a candle is just a data set. Doesn't matter what the time frame is really. Okay, so we have blue flashes, and then you have still in the negative trend here. That's because we're below a 30-day power mean. This is the first time we've had, let me make this big so it's easier to see. It's the first time we've had this power mean come into play. As you can see, it's been quite a pivot, and that was pretty much here at 54.23 cents. So I'm led to believe you'll have to start having a lot of steam come through the box before this 30-day close, which is 28th of October, so in 8 days. You're going to need a lot of steam to get you up into this region or above it to print, and then look for the pullback into the JMA and then the long out. So there's a lot of steam that needs to be formed over there. 14-day. Sorry, I need to do 21-day. Okay, cool. So what do we have here? We have contraction, positively correlated, and that's negative drift. This one says, so there's 75% bears in the current market. Easy. There's a first initial push to the downside, and we didn't get the one standard deviation move, but we hit the JMA. Okay, you stay above the JMA, this takes longer to mean revert, that thing starts to contract itself. Alright, 21-day, not looking so healthy. Let's go have a look at the reverse wave trend, where that is. This is up here at 58.64. So there's a lot of 58.64s in this general region. And now I'm going to go to Binance. And there's a breakdown, so there'll be a little bit of pocket liquidity up here as well. Alright, so we have contraction positively correlated with a mean reversion. That's looking to carry on through to the downside. That slows it down because it's still in the positive trend. Why is that? Because a huge dildo is still in the data set. Okay, So you got to be very on point with your data here. We've had our blue flashes off with contraction. This, how long does it take to usually contract? So maybe on the next one we'll start to look for an expansion phase out of here. So if it doesn't rinse itself, as you can see, it's just had like a little iceberg order thrown in here, which has lifted it up. Where's our mean reversion? Is that whole candle. And our previous outlier is not on the map. That's fine. So 5 day. 5 days had its mean reversion. You don't want to get on the wrong side of the 5 day. Okay. Moving into positive drift. They can drag this out, but because this is a small column, you'll know that it's very hard for them to make this next action bigger than the previous candle it came from. Mean reversion play to the outside. Let's go through on a reverse wave trend, because I feel like we are grinding on something here. Let me switch off the cone. Oh, what happened, Keegan? It's a reverse wave trend. We're going to do this without reverse wave trend. Wait, I have a plan. Here's a quick trick. And now it should load. If you delete it, press Ctrl Z, and then it should load up again. With any indicator. So mean reversion to the downside, 3 day. With a little bit of negative drift in the book. 3 days looking for expansion, whilst positively correlated. That's the initial hunt that's keeping this wick up. We have hit an outlier event, which I'm guessing is now on this reverse wave trend mean. Okay, came in, haven't smoked that reverse wave trend mean as of yet. So maybe as this price action goes sideways for a little bit, obviously reverse wave trend mean is going to lift up. The next candle tags it, which lines up with the pullbacks on those 21 days, the 30 days into that little JMA region, right? That JMA was at somewhere, what? They wanted 4,100. Alright, so when that prints, it's obviously going to print a bigger range than this little one. But that's fine. So we know that we're looking for a little bit of a pullback off of initial structure. Let's see what stops that. So we're back on the 24 hour. We can throw up that cone. Nothing's changed. And you're looking for something that's going to stop the pullback into this cone over here at 41.44. Or even to the other side of the reverse wave trend when it prints at for about 40 cents region. Is you have a daily mean reversion outlier already had its first standard deviation pull to the upside and like a hidden bull div. I don't know, someone can correct me there. Outlier event confirmed. So all we're looking to do is close above or below said point that we had indicated earlier on in the market. So we have a 12 hour with mean reversion above JMA, sort of looking like it can get chopped out. It's getting front run. There needs to be, the next 12 hour print will have to be bigger than this candle in order to whip those things around and keep momentum in the market to get entropy to kick down. Does look doable. Outlier, outlier, blue flash off, blue flash off. Initial returns to the downside. DLP is saying that the general trend is wanting to kick up. It's also matched up with our here. We'll do it on this one because we got the cone over here. So we have mean reversion play, DLP mean reversion play. Only thing really limiting it now is because these returns look like they've been fanned, as you can see, like little big, it can mess with this thing quite easily. So then you have still expansion phases in the book, but it looks like it's losing a bit of steam. It might have one candle left, and that could be decided up here at 46,666. Okay, now to the 3 hour. This one's a bit of a long one, but we want to make sure that we are on the money. So we're at the reverse wave trend. Generally, you close above reverse wave trend, you hunt that target, you hunt 48, 46, which is ironically the same PB level that we've discussed earlier. If you're writing numbers down, for example. So we have a contraction phase. One is negative, one is positive. That's sideways. That's limiting that. That gives DLP the time to mean revert. Then you have contraction, one's positive, same thing. Wait, let me read that again. Yeah, same thing. just sideways for now. Returns are contracting on themselves. How do we know that? First off, you can look at the size of the candles in comparison to those two. But furthermore, now it's looking for its mean, and these little crosses like to be traps. So we can see a bit of a trap from here. You'll need a break above this thing. Maybe want to form a bull dev above it. If you can see one forming here, catch that, and then you can push up out of here into a VRE level. Nearest one up here. There's a mean VRE level. Okay, so we are hunting weekly mean from down here because we have tapped our monthly mean. Alright, saves this trend, reverse wave trend. Also, again, a wick into a lot of panic selling. That's what we demarcated yesterday. There'll be a lot of panic selling here, so you'll be able to fill up. Same thing applies. You break reverse wave trend, a lot of panic selling, but there's the mean here, and even this mean and this mean. So it takes a lot of steam to break through two heavily weighted means, right? So look for more bull divs. Look for more bull divs. And if it does break through, we'll go look at like a 6-hour cone and see what that level is. If it does break through, you're looking at 39.45 cents. Okay, because it's failing this level here, and that's quite far out. That's the other side of the mean, right? That will have a monthly outlier event occur. And then we're going to go through it to the 45-minute. Just getting so choppy, I love it. Okay, contraction, also sideways. So we're looking for a move to develop from here. Entropy is moving into a random point. Where did it start to decay? On the way down. So the chaos says that it is to the upside. We'll see if this is a book flip region. We'll have to investigate a little bit deeper onto like the 5-minute, the 15-minute. Okay, random point, same as the previous one. Mean reversion play here. Let's load up. Mean reversion play here. You guys, maybe I can switch one of them off so then they'll load faster. Mean reversion play here, 4593. Will confirm if you hold below JMA. DLP will be squeezed a little bit for a little bit longer if it needs to be, but usually she's on the money. Contraction, positively correlated. Next best is expansion. Those suckers already in positive correlation, so that looks like it wants to have some positive drift or expansion, so we've got to see who's keeping that up. So it looks like we're going to be deciding this trend from the 15-minute to the 5-minute as it's getting a bit tighter. Contraction, positively correlated, still got the drag, which adds to that if it closes below. Outside reverse, there you go. So you're looking for this side. 4572. There's your initial target. There'll be liquidity here. And close above reverse wave trend. You can deny this bearish mean reversion, but my friends, there you go. Okay, cool. This looks like it will be on its journey if it closes here to the upside. This is Shannon Entropy and volatility working together here. As long as these two don't, there you go. Now it's triggered back off. So as you can see, this is what helps me know that there's going to be something like this being denied a bearish mean reversion. Why? That's positive drift. That's buying it up. Okay. Now it's sort of pumped itself into a dump. Sorry, this is taking an extra minute here, but I just want to explain something. As long as those stay green, it can lift up. But as soon as one of these goes red, with these two down, you'll see that sell order will come through the book. Alright. 5-minute. Oh, we have a 15-minute cone. That's very good. Here's the 15-minute cone. General idea being is we have been messing around with it. That's what we started the stream off with. You have plays here. Now it's starting to look like we're wanting to hold above. Obviously you can get nailed, but there's some wick to the downside here, some cover to the downside, and there's a mean here. So this will be easier one to dictate. You close below the mean, you want to obviously hit here, but it will want to fight back up for the mean. We have a mean here. We didn't do all this hard work not to go touch the mean and fail, so that would be a good thing. Front run them from the mean to here, panic sell in, or if there's someone bigger than you, they're going to front run you into this level or into that level. With 47, so here are the targets: 47.67, 47.26, initial profits 4.678, halfway failure 4.648, bull div forming at 4.611, still a bull div if it can say 4.591. Longer term, like a 45-minute bull div, 90-minute bull div, if price touches 45.70, it breaks below that, you'll be setting in bear div all the way down to 45 cents. And then from there, as we've had a lot of selling pressure, you might look for continuation through. And vice versa goes to the same side. Our general mean reversion, until stated otherwise, is 48.41. So you look for positive drift through the book to kill the bears. I hope this was helpful. If you do and you stuck all the way through, thank you. Please do like and subscribe.